The stock market has experienced plenty of ups and downs in recent months, and the roller coaster ride may be far from over. There's no shortage of hot stocks these days, but finding companies with quality businesses that can generate consistent growth amid both economic headwinds and tailwinds is a challenging feat. In this video, I'll show you 2 sizzling hot stocks to look into right now. Don't forget to subscribe. Let's head into it. Number 1. Veeva Systems. It's not often that the highly defensive healthcare sector and fast-growing cloud computing industry overlap, but investors can get best of both worlds in Veeva Systems, which provides cloud services to life sciences companies. Veeva Systems has only been publicly traded since 2013, but in that time, it has returned an eye-popping 630% for shareholders. In the past 12 months alone, shares of the company have shot up by 26%. There's no beating around the bush though. Veeva Systems stock is pricey. At the time of this writing, it trades at approximately 124 times earnings and 32 times sales. However, I would note that the company has a particularly exceptional track record of consistently boosting up its top and bottom lines while maintaining strong liquidity and managing its debt. This has fueled investor confidence in Veeva Systems year after year and driven demand for the stock. It also has a strong competitive advantage as one of the only handful of companies that provide cloud-based services exclusively for life sciences entities that are healthcare, pharmaceutical, and biotech companies, and there's considerable room for it to expand within its highly lucrative industry. Spending in the cloud computing market is expected to exceed $832 billion by 2025, according to a 2020 report from researchandmarkets.com. Another report by iHealthcare analyst forecasts that the healthcare cloud computing market will reach nearly $24 billion as of 2027. Veeva Systems began its fiscal 2022 on February 1. Looking back across its past 5 fiscal years, it reported annual revenue growth increases of 33, 26, 25, 28, and 33%, and annual net income growth of 26, 106, 52, 31, and 26%. In fiscal 2022's first quarter, which ended April 30, its revenue popped 29% year over year, while its net income grew by 33%. As of the end of the quarter, Veeva Systems had $1.2 billion in cash and cash equivalents on its balance sheet out of $3.2 billion in total assets, compared with about $710 million in total current liabilities. Meanwhile, management is forecasting up to 20% revenue growth for the fiscal year. In May, Veeva Systems announced that with a growing need for greater efficiency in clinical studies, more than 100 organizations are simplifying trial management and monitoring via the sturdy adoption of Veeva Vault CTMS, a clinical trial management system from the company. Veeva Systems has been witnessing an upward estimate revision for 2022. Over the past 90 days, the Zacks consensus estimate for its earnings per share has moved 8.7% north to $3.50. Veeva Systems stock is expensive, yes, but when you consider the company's ability to operate profitably in all types of market environments and its long-term prospects within the context of the rapidly growing cloud services industry, the valuation becomes far more palatable. Number 2. Innovative Industrial Properties. Innovative Industrial Properties is another strong contender for investors trying to build market-beating portfolios in the cannabis industry. This real estate investment trust, also called REIT, is in a class of its own, holding a broad portfolio of commercial facilities across more than a dozen states that it leases to licensed medical-use cannabis growers, with operations in key cannabis markets including California, Colorado, Illinois, Maryland, Massachusetts, and Nevada. It's no surprise that the company has not only recorded rapid balance sheet growth, but quickly expanded its footprint as more states have legalized medical marijuana use. The company essentially buys assets from legal pot growers and then rents them right back under long-term leases. This is a win-win deal because the marijuana company gets capital that it can use to grow, and the REIT gets a new property with a tenant already in it. Moreover, the leases are usually net lease in nature, which means that the company's tenants are responsible for most of the property's ongoing costs. In 2020, Innovative Industrial Properties spent more than $620 million on additions to its portfolio of properties. The company has continued its rapid rate of portfolio expansion in 2021, with 4 acquisitions in 3 states in April and May alone. In its most recently reported quarter, the REIT produced revenues of close to $43 million, a 103% jump from the year-ago period. Furthermore, the net income increased year over year to the tune of 122%, and its adjusted funds from operations popped 116%. Innovative Industrial Properties isn't only a compelling stock buy because of the core strength of its business in the competitive marijuana space, it's also an attractive dividend play with a robust yield of 2.4% based on its share price at the time of this writing. Because REITs are required by law to pay out 90% of their taxable income as dividends, it's no surprise that this growing business has a consistent track record of boosting its distributions. Management just announced in June that the company was raising its second quarter dividend to $1.40 to $1.40 per share, up 6% from its first quarter payout and up 32% year over year. Shares of Innovative Industrial Properties have popped more than 120% over the past year, and if you look at where the stock was trading just 5 years ago, it's trading almost 1,000% higher now. If you're looking for a reliable dividend stock and an attractive marijuana play, Innovative Industrial Properties more than satisfies on both counts. This brings us to the end of our video. I hope you enjoyed it. Hit like if you did, and don't forget to subscribe to our channel so that you don't miss any of our videos in the future. With that, I'll see you in the next video.